Hello, guys. Welcome to Traders Therapy Session. Without wasting any time, guys, let me drop you an ICT proof right here and show you how we took this trade today. It was not the easy one, though. The trade that we were trading is now before 16:30 South African time, before 9:30 New York time. So we were taking a Judas Swing trade. So what did we see here? As you can see, we were looking at the daily, what we could expect on a daily, though this is what is been so this is what we saw, I mean to say. No daily bias. It was 50-50 chance here because, as you can see, look at the candles. What is happening right here? We might experience a consolidation for some while. So automatically, I had to manage risk and risk less at this point. It's a risk low day. Trades for the day. If I see this kind of a day, this is what I like to see. Trades for the day. Judas Swing, because Judas Swing doesn't require daily bias. So Judas Swing, I can take a Judas Swing trade on this kind of a day, and then 59 minutes scalp. I can take that 59 minutes trade. Why? Because it doesn't require it also doesn't require 59 minutes. It doesn't require daily bias, I mean to say, as well. So then for entries, for main trade, wait for price to get to the point of interest first. So before I can even try to consider taking a trade here, I will wait for price at least to come into this fair value gap. At least I will know that price will react at least based off this fair value gap and order block. Then I can expect the price to reverse or do some sort, and plus it will maybe take this liquidity that will be resting around here. So I will consider buying at that point, but I will also look at the candles, how they react at that point. And if the price comes here, remember we tapped into a daily fair value gap. I don't know, but if you can look at the video that I made a previous video when I was back testing the 59-minute strategy. So there's this fair value gap is part of that. So this fair value gap was tapped and then the price reversed. So this is 50% of a fair value gap. So this fair value gap is still valid at this point. So we'd wait for price at least maybe to tap into this and see the reaction. But basically we are having a consolidation period at this point. We might not even want to take trade if you see things like this. So what else did I see here? I went to an hourly time frame. From hourly time frame, then I checked the areas of interest right here. Then I saw buy side liquidities, where price could potentially go to, and then I saw this fair value gap on an hourly time frame that the price could even come at this point and react. So this was my areas of interest and the low right here. So I outlined this and waited. You can look at the time. This is the start of a Judas Swing. So I'm expecting a Judas Swing to okay. I already know once I see this moves like this, I already know that I have a sell. So I don't need a daily bias for that. I have a sell. This is my first TP and this is my ultimate TP. So as we were looking there, going to 15 minutes, look at the time right there, Judas Swing. If you are in South Africa, it occurs during at 7 a.m. up to 12 p.m. And if you are using a New York time, it's 12 a.m. midnight is 12 midnight and up to 5 a.m. That's when you get your Judas Swing here. So obviously, if we have a Judas Swing, there must be a point of interest. So what could the point of interest be? Then I'm looking at the order flow now. Then the point of interest could be this area. So I know that the market is going here. While the market is going above this point, is approaching, I mean to say this point, I will want to see a liquidity being taken out at this point. I want to see the buy stops being taken out at this point and market structure shift. That is the strategy. then I get my sales, then this will be my first target, then this will be my second target, and I will show you how I missed this trade. Actually, I missed this trade while waiting, and then I ended up on a funded account, but I was risking less. I ended up losing $40 because I was trying to catch up with it, but finally I had a clear entry while when it was coming around here. So there's a strategy, there's a reason why I took it while it was here, just to come to this point, because this is the last point. Whenever the point is like, this is like a 75% quarter range. So whenever the price is at that point, whatever the expansion that you are going to get, especially after the liquidity, the expansion that you are going to get the expansion towards the TP. And looking at the time right now we are 16 minutes away. So you will understand 16 minutes away to 9:30 if you are in New York, and 16 minutes away to 4:30 p.m. if you are in South Africa. So that was it. I was waiting for that. I guess I got the second update. I gave the second update right here. The liquidity was taken here. I was happy seeing this happening. Then the market dropped. I was waiting just for market structure shift right here. So while waiting, then after I moved, this is the Judas Swing. So I waited for, then I had the market, then the fair value gap, then the last candle of a fair value gap. This is where I was expecting my entries actually to reach this side and to reach this point. But after market melted without revisiting, and once the market can break the low, so that thing becomes invalid at that point. Your Judas Swing trade becomes invalid at that point, unless if you are trading a normal daily trade. So we missed the trade, as you can see right here. Missed entry around the Judas Swing. So now we are waiting for 59 minutes trade to okay. So it is just the matter of time now. So but I ended up losing $40 here, like with a funded account, with $15,000 funded account, and then I ended up making 1:3 while price it was around here with a normal small account, which is 121, what was 137. So I ended up gaining, I was risking $2. I ended up gaining something like $6. We'll see when we get there. So I guess this was it. So this was the Judas Swing that I missed. This is how I was supposed to, when was this? This is not for today. This is not for today. This was for yesterday. Okay, let's just go to the entry that I had. So let me just explain this entry. I hope it's visible, the contrast right there. Let me just explain the entry here. We were approaching the low. We were approaching that point of interest, the hourly fair value gap. So as we were approaching that point, like I said, the quarter theory, this whole consolidation, to me, it was 75%. So why not capitalizing? It's a risk trade, though. You want to drive trades from there, but why not taking it with a small risk, though? I'm supposed to risk $7 on this account for today, which is 5%, but I chose to take two trades. So let me risk low here. I risked $2 here. I was risking $2 here. Then I was targeting the lows that was created. So what happened here? As the liquidity was taking, I was watching the market taking out this liquidity. As liquidity was taken out, and this is after 8:30. This was 8:30 move. I knew that this 8:30 move is some sort of a Judas Swing as well. So I waited for this move to occur. Then after, I saw this fair value gap. So I could have taken a trade here, but the stop loss was supposed to be here. And since this was a risk trade, I had to be careful with my trade. So, and I'm so proud of myself for having this type of a psychology that I'm going to break it down to you. And you will see I took it straight to the point. This I can say it's what you can say it's a sniper entry, because I took it to the T. What happened is that I was watching the candles coming into this fair value gap. I wanted to see the momentum of candles, bullish candles dying, telling me that the market is ready to reverse. Now I was relying on this fair value gap and the candles alone. So I left everything. I was relying on the two. So as the momentum was dying here, I saw my entry basically was around somewhere around here, on this order block being the 1, 2, 3 candles. You see, then the market came to the order block, even though this order block was violated, but look at the body close. So this was my confirmation to go short here. So the body close, if you can look 1, 2, 3 bodies, you can see that the momentum is dying right here. So after the body close, you can see I immediately entered. I even managed to increase my risk when it comes to risk to reward, because my entry was supposed to be here while I was watching the candles. Then I managed to get the entry here, and you can see the momentum after I've entered. You can see the momentum after I've entered, and the target was this area. Why didn't I target the main daily target? It's because this is a risk entry, and then where I entered, like, it was too late. So whatever the market was giving me here, I was fine with it. But hopefully it was a good trade, because it was 1:3. So I managed to capitalize 1:3. The market was here. The time I closed the trade, it was around $6. This is the price. It was around $6. Let's see. Yes, it was around $5.93. So I managed to enter here and take out my position here, but with a TP, because I was targeting these lows. I knew that the market was coming here, but I was targeting this because it was just a risk trade. I could have done maybe 1:6. How do I feel about that? It's fine. I'll get the next one. So now we're going to look at the main trade. Without wasting any time, guys, let's just go into it. In fact, we are not going anywhere, guys. I'm leaving you here. I'll see you in the next video.